Okay, let's go ahead and get into the stock market technical analysis. We'll go through the broad markets, we'll look at some individual trade ideas, and then we'll go ahead and wrap up. So here we go, guys. We are looking at triple Qs gapping up today, and as of right now, we're back within this big sideways trading range that we were at for about 6 weeks, back in that range. So there's no way to chalk that up but bullish for sure. And if we stay in this range and we get a daily close back into this range, then ideally it probably signals that we're going to go back to the top of the range. Okay, and then possibly, and I would say actually a decent odds that we will break out of the top of the range right there. So that's what I'd be looking for. As of right now, looks like they're kind of holding it within this range. There's really nothing to do but chalk it up as bullish. So what I did, obviously, before Apple earnings, I tapered down my triple Q short position to a half size position. And I really told everyone I wasn't looking to add until I saw some sort of a rejection, because after Apple, they gapped it up here, and then we were looking for some sort of a rejection. We haven't had that yet. So at this point, going into the close, we'll see how we close the day. But in general, I'm looking to, as long as we close up into this range, I'll be looking to kind of cover that position, cover that half position, and wait ultimately for some sort of a rejection. Okay, wait for some sort of a rejection of the level. If you're a bull, obviously you could just buy, and you could just as long as you can hold that 434-ish area, then you should be good. As long as you hold that, it can continue to rally. So as of right now, I'm giving it a little room. We got about an hour and a half before the market closes, so we'll kind of see how we trade into the close. But bullish as of right now because we've recovered that trend line. So that is that. The other thing I want to look at is, well, we can look at the futures here. We'll look at the futures. Here's the NASDAQ futures. And you can see basically, there's clean resistance right here. I mean, this was a very strong resistance. We're above that now, all right, as of now. Now, again, this is a daily chart, so a lot can happen in the last hour and a half. If they come out and sell this thing into the close, then we are, then it's basically, this is just stop rate price action. We're popping up into this range, running a bunch of stops, and then we will reverse. So the close will be telling, but if we were able to hold and really recover this level, then it's not good for the bears. Really, there's no way to chalk it up but bullish. So that's what I'm looking at, seeing how we close. If I look at the Mag 7 stocks, Tesla's not really significant, but Tesla's moving up. It looks but Apple. Okay, so here's Apple. This one is significant. Obviously, they reported earnings. I tried to short this thing with a starting short position post earnings in the after hours. I shorted it at about 181.30 or something like that, and continued to rally up. But I was looking for it to sell down. They have been selling it ever since the market opened after the earnings. All right, earnings opened, and they've basically just been taking profit on that pop up. So we'll see if there's going to be more selling. For me, just because triple Qs is into that level, it doesn't make sense to add to shorts. And so because this one traded back down to my entry point right there at a break-even trade, I just covered that short, closed it out for really for break-even. And, it doesn't make sense to add to shorts as we've recovered this trend line. Now, if we reject and we start to see triple Q start to sell down, then it does make sense to add. But as of right now, it makes sense to really stay flat, or, depending on how we close, of course, looking to kind of start to cover some of those short trades. Now, not all of them, all these short trades. I'm talking mostly about the index short trades. Apple's kind of an index short trade. Triple Qs is basically Apple and Microsoft for the most part. Nvidia, is in there as well, obviously. So that's it. Apple, let me flip back to the daily. Back down to the 200-day. It's at support now, so if this is where the bulls should be stepping in, right here basically at the 200-day. And so we'll watch that. We'll see how that closes. I suspect they're going to close it right around the 200. But if for some reason this thing just starts to dump and flush, then it's going to likely bring the triple Qs down, and we'll keep an eye on that. NVIDIA, rallying today. And again, I never really saw any real clear signs in NVIDIA of anything that looked like a short setup. So, NVIDIA is continuing to rally. Again, I don't see any trade here. It could easily pop up and make a new high, all right, a new divergent high. Earnings is still a couple weeks out on that one, so it's free to do that if it wants to run up and make a new divergent high. Google's really gone nowhere since earnings, so they popped it up on earnings, sold down, and we're just continuing to trade right at that trend line. If I look at the daily chart, there it is. Resistance all along that trend line, and we're just right there. All right, so at resistance, this one should get rejected here, but it's just kind of trading flat right now. Microsoft rallying into some resistance here. You can see we're basically there now. Kind of extend that out. So that's resistance. It's sitting at about 413. So yeah, I mean, I'd expect a pullback here. I'd expect it to pull back, and we'll watch for that. And then Meta, they're starting to run it into this gap or break above this former gap. So this was the big gap. I think it was on earnings, and then it gapped down. We still have that island cluster top. Sometimes what you'll see, though, is they'll kind of run it up into this gap a little bit and run some stops. Unless, I mean, really, you can't say that the island cluster top is not still in play until you make a new daily closing high above the former high. Okay, right up there. Now you can close the gap, and that happens. Sometimes you'll see them kind of close the gap, but it's still an island cluster top. All right, you still have separated. You gapped up, you gapped down. All right, you've kind of held that. In general, you really don't want to see them go much beyond the midpoint, about 498.50, I would say. Anything beyond that, I'd say we can't say we have an island cluster top anymore. And there's also this trend line. All right, this is a big major trend line. If I look at the daily, this goes all the way back to November of 2022. Support, I've got it all marked out. It's a big messy chart at this point. But, you could run up and backtest that trend line. All right, that would be possible too. And that would be an objective area to short at. Anything above the former high, though, especially on a daily close, would negate that as a top. So if you're short this thing, you'd want to stop out if you start making new highs above that high that we made back around April 24th. So that's Meta. Amazon, in general, Amazon still looks okay. I mean, this one looks like it's going to run up and make a new high. All right, it looks like it's probably going to do that. Could even backtest this trend line right here. So it looks like it's got a little bit more to push up, make a new high. It'll keep the negative divergence in place if it does it. So it would be an objective short if it backtests that trend line. But as of right now, it looks like it can do that, run up and make that new high. Some short trade ideas that I've covered recently, some of them still look fine, individual trades. The indexes, not as much. They're starting to question that. But the individual pieces like Qualcomm, you can see we're still trading, we're still backtesting this trend line. That's former support. And you can see we're kind of just hanging out, backtesting that trend line. So it's still an objective short. We still have negative divergence. I think we're going to get that pullback. Sometimes it can backtest for a few days. So that one still looks good. And then the semiconductor index, it's starting to break out a little bit. You'll see this downtrend line here on the daily chart. You've got multiple reactions. Here's another one right here. And we're starting to, break out basically. It's not extremely impulsive. And again, I do need to see how we get the close. But if they can hold this breakout above this downtrend line, then yeah, this one is probably going to want to continue to run. So it's a little hard to say what's going to happen to Qualcomm if the semiconductor index continues to run up. So we'll have to just get a few more data points. But in general, Qualcomm short looks okay. This one is in question as of right now. This is a daily chart, so we have to wait for the day to close. You can see GM, this one again, still trading at resistance. This is a bearish engulfing candle right here, so that's kind of a topping stick. and we have held that high. We have not been able to get a daily close above it. In general, we've gone nowhere for about 2 weeks now. We're just kind of trading at this resistance level. So still okay as a short trade. We have negative divergence indicating that there's more downside likely. And we just need to, this just needs a catalyst to start to roll over. Same with JP Morgan. Again, just hanging on to that resistance. You can see this was a former gap. And we've got, 1, 2, 3, 4, 5, 6, 7, 8, about 8, 9 days of kind of hanging out in this resistance area. We're just not moving up, not moving down. So in general, still looks good as a short. Negative divergence is still intact. So we just have to, we just need a catalyst. This is just waiting for something. So, okay, let's look at a couple things that are working to the upside. Wheat, that one's obviously been on my radar for a while, but I pointed it out just recently, looking like it was going to break out. We are continuing higher. There's this bullish falling wedge here, the widest part of the wedge, sets us up for a push up to that target about 665 for the measured target of that wedge. So this one still continues up, looks pretty good. Momentum looks good. I don't see any negative divergences. I see strong momentum straight up. I see price moving up. So this one has more room to run. Looks like there's some more upside, and we're probably going to push up to that next level, about 665. And on that note, we've got this NTR one. I think there's opportunity here. Hasn't really been able to run yet, but if I look at the daily chart, you've got a clear downtrend line here on the daily. We also have what looks to be, there's a bullish falling wedge right here. I don't have that marked out, but bullish falling wedge. You could take the widest part of the wedge, which would give you a measured target on the breakout point, which I guess is right about here. And that sets this one up for a push up to about, $75. And you can see it already broke out of the wedge right here. And then it was back testing, broke out, back testing, that's what this is. And looks to me like it's starting to run. The only thing we have left is earnings, and that's coming out on Wednesday. So the chart set up bullish. You've got very strong bullish divergence that's been building for a while. You have a bullish falling wedge that we were broke out and we're back testing. And we have earnings. So if I had to guess, earnings is going to be perceived as positive, and this thing's going to move up on earnings. And then I think it could run up to that $75 area for the measured move. All right, that would be the measured move up there. And typically what you want to do is align it with some sort of trend lines that you can find. If we just move it down, it looks like we've got some area right about in here, some resistance. Yeah, so right around 77 to 75 for the target, the profit target. So that one hasn't started to run. Of course, it's higher risk because you've got earnings coming out. Everything, they could gap this thing down. Sometimes when the chart's set up very bullish, earnings can foil that. So obviously higher risk, but if earnings does come out positive, this thing obviously can run. Someone asked me about the home builders. So for the home builders, you want to look at the interest rates. And this goes back to the broad market as well. When I look at the 10-year treasury, you can see we are still holding this trend line. All right, we're sitting basically at support. We've got support, multiple reactions, and it indicates to me that we're going to bounce. Rates are going to go up. We're going to see another push higher. If that happens, I suspect that it's a good probability the market will sell off on that. And so keep an eye on those interest rates, and the interest rate sensitive stocks like home builders. If you go to that one, this PHM one. Now this one's continuing to kind of push up, but you continue to have negative divergence. And, we did just make that divergent high right here. So I would like to see this not get a close above that most recent high. All right, right up there. It's about 120.50, 120.75 or so. I don't want to see a daily close above that. You get a daily close above that, and it's just not favorable for the short trade. Otherwise, I think it's okay. We just came off a divergent high. They sold it. They sold into it today. It's basically flat. It's up a little, but in general, not moving a lot. So I think this is very likely going to continue to push down, down to our next target, which is about $100. All right, there's some decent support down there. Okay, that's really all I have for the markets today. I'm going to get the video out there. Guys, drop me a thumbs up if you're finding value. Feel free to join up in the private member group. I'm going through additional trade setups, additional market commentary in that private member group. Link in the description below on that one. I'll catch you guys on the next one. Take care.